Welcome to readtheticker.com. Here is a chart of Caterpillar, and it's constructed in this way. We have price, true high low close, monthly candle boxes, RTT volume, RTT trend power OBV, and a standard MACD. More importantly, applying Wyckoff logic to price waves is the best method to determine what the institutions are doing in the stock. Let's have a closer look at this. For example, there's lots of violent swings going on in Caterpillar chart. And here we have a downswing, holding down the V key and clicking the mouse. Here we have an upswing. As you can see, price moved probably about 10% down, but the volume, the volume is pretty light. As you can see here, trend power OBV, which is a combination of on-balance volume indicator and a trend power indicator, shows that the price move doesn't really have volume behind it, so it's not a real liquidation. Here we have a swing up. That's a more aggressive supported move with volume with the blue bars here, but really nothing substantial as it basically fails to get above the plus 15. With the trend power OBV indicator, to go bullish or to look for a buy opportunity, you want to look where it crosses the minus 15 for bullish and the 0 for bullish. Now, if you're bearish, you want to look at crossing plus 15 or 0. So as you can see here, the two moves not really supported by volume, but the bullishness is on the bias at the moment. But here we have a pretty good swing down. As you can see there, the price move down is near equal to the trend power OBV volume move. So you can say price action selling is pretty true. Bit of accumulation there. As you can see here, the monthly candle boxes show that there's support at this level. More importantly, everything is very interesting about here. If you look here, there's price swing down. As you see here, there's about a 10, it goes from 89 down to 80, which is about a 10% move. But here, as you can see, there's hardly a ripple in the trend power OBV because there's just no volume behind it pushing it down. It just sort of breaks support there, just as probably bust stops. On the swing up, I think the can't remember what the news of the item was, but it starts to get a bullish between here and there, here and that low and this high. And we have a pullback here. As you can see, it's quite a substantial pullback, which probably would have stopped out a lot of retail investors. But as you can see here in the trend power OBV, the volume representation of the price move is very, very light. As you can see here, very small bars in there, nothing really going on. Might even be Christmas, would it? What is that? Yeah, it's just around the Christmas period. But that was used to bust a lot of stops. Moves up here quite substantially. When price moves equal with the trend power OBV, that's basically price is confirming the bullish trend, and it's pretty healthy. Same on the downside. Here we have a pretty strong move to the downside of price action, and the volume action basically supports it. Starts off slow, but it gets quite aggressive here. Okay, so now they see a price move which is still quite aggressive, but the trend power OBV is not really, plunging below minus 15. It's slowly tripling down, and as you can see, the volume bars aren't really spiking up too dramatically above the average there. But then, sure, it's moving down. Yes, it is a price move worth a trade, but really it is starting to slow. Which obviously you'll find a base around here, which is the support line around the 80 period. So I'd expect that to sort of start accumulating and forming a base to go sideways. So here we can interpret price moves with volume behind it, both up and down, to find the true price action behind it with volume behind it. If we go to another one, we'll look at Health Sector XLV. Spider Health. Now here we have a very strong chart with the trend power OBV and the volume bars here. I should mention, when you have a dark blue bar, that's when you have price action closing on the high. When you have a dark red bar, that means you have price action closing on pretty near the low, give or take 20%. So, same with the high. If the close is in the top 20% of the blue bar, it's a dark blue, and it's above the the average is the dark blue, and if it closes on the lower 20% of the bar and the red bar is above the average, then it's dark. So they're the moving type bars. As you can sort of see here, just do this one quickly. Price action between there is pretty true, sold down, no deviation. Even though it went sideways between here and here, you can see the trend power ABV sold down. You would have hoped to be bullish there, but it just broke that day there. Now we had a price move up here. It was a moderate move up, but as you can sort of see here, it's gone to the same zone. So it's a price move down and the price move up are the same, but here we have not recovered. So the volume on the upswing has not quite equaled the volume on the downswing. So you'd be a bit nervous going long there, but you're not nervous when you see this type of action. Here you have a, Control V, here you have a downswing, but there's just no volume. There's no volume on the downside. As you see, there's just nothing happening. So there's no sellers around. The institutions are not selling this. And I think there was a sequester type issue in Washington was resolved, was delayed or something. And that's when the buying just exploded. So this part here, strong OBV, trend power, and the price action very strong, very powerful. Here you see price action going sideways, but the trend power OBV slumped a bit. That's because of these few red bars in here. But the price action doesn't go down. That is very bullish in the sense where price action goes sideways. And there's a bit of selling going on, but price action is not budging. And as you can see, when it decided to take off again, the institutions didn't really sell here. It just exploded again. That's a good case of a very strong price action has been supported with volume very well. For example, this little dip here, not hardly a budge down here. Very powerful. Okay, now we're going to look at because it's in the news, the gold action. We're going to look at USO, which is the oil ETF. Now, the two commodities you'd like to own in a money printing world that are basically that can't be printed is gold and oil. So if the money printing was over and somebody said, well, money printing is absolutely not going to happen anymore, the premium in gold and oil for money printing would evaporate. Therefore, there'll be liquidations. All right, so here we have. Let's do a quick review of the oil. As you can see here, we had a pretty strong sort of move between there and there in oil. It flattened out. That's a substantial where price action and the trend power and OBV confirmed. There's lots of little blue bars running there which supported the price move up. There's nothing wrong with that action. Flattened out here. Came all the way down. So that action there is equal to that in the sense where the selling down was, confirmed supported by volume. Here we have another swing up, but I would say that this move here is weaker than that down move because this price action didn't really recover that well on the trend power OBV. It just goes to plus 15. I like to see it smash past plus 15 and continue on. Here, something actually happened and it was dragged down. Now this is, as you know, this is from here to there is the bust in the commodity market in the recent weeks. But if you look at this, you see the trend power OBV is, yes, it's gone down, but it's not gone down nearly as aggressively as the price. Because there's not really, as you can see here, the volume behind it is pretty mild when you compare to a sell down over here, for example. A sell down here, there's not a real blast off of liquidation. So I would expect the oil to find support. And you're sure it might go down another few dollars if that is the way, but I doubt if it gets volume support. Which obviously tells me that the institutions are letting it happen, but they're desperately waiting to buy it on the way up. Oil will go down if there's a confirmed recession, but I don't think there's a confirmed recession yet. There may be one warming up, but I'm pretty sure until there's a confirmed recession, I think oil will hold its ground and bounce back. So now that we know that oil, yes, it was sold down, but no, the institutions aren't liquidating oil on the grounds that money printing's over or Ben Bernanke is going to stop his $85 billion a month. We just see it's been traded down. Probably more like traded down to be brought back up, I would suggest. So that's our view on oil. So we go to gold, GLD. Okay, gold has been sort of like a slump. Every rally has been punched down. You can see by the monthly boxes, the new monthly lows holding There's no real gain in the monthly bars. You know, she with the MASD, you know, it's way below the zero line, so there's just no trend there. We have a base here, which was, I think it was around 1500. Everyone was hoping for support there. Probably a lot of retail investors got involved there. So what actually happened, it actually went below the minus 15 and smashed back up above it. I suppose I shouldn't use the word smash, it crossed it. This is the failure. When it goes above plus negative 15, you like to see it charge up and smash out zero to show the buyers are really excited for the opportunity and really take it much higher. But in this moment here, there was no interest in the buyers. Let's make that a little bit easier to see. But here it just faded. The buying just dried up, and that was a real danger. When you see it cross a 15 here, you want to say, right, show me that the buying is present, and you want to see that smash up to probably plus 15. And as it didn't turn up, that means you got a risk of another swing down, and obviously you can see that. Now if you, yeah. So, and it's just starting to turn here. Why have you, for example, we've got all these low range, we've got these narrow range bars with very high volume. The blue ones I'm talking about. When you have narrow range bars, the price has been contained to buy at lower levels. They haven't allowed price to explode up in wide range bars. We want to be a wide range bar. For example, here's a wide range bar here. You see the volume there? See how the size of the volume relative to that wide range bar? So that's punching price up to get it to a new level. Same with that one there, and these ones here. They're wide ranging bars on the volume. If you look over here, you'll see, like, because it's true high and low, you don't really see that. But look, if you look at that one and these ones, narrow range bars, much higher volume than these blue bars. That's because they're keeping prices down to accumulate at the best level possible. So that's pretty bullish, quite frankly. So there we have, when you use the trend power OBV, you want price action to be confirmed by volume to show that price action is true and it's worth holding your position for longer. For example, obviously here's the situation where price moves up nicely. There's a bit of a drop off there. Now it's not necessarily bearish straight away. Obviously it holds up here, but you know there's a bit of a new high here, but it's gone sideways. So really what you're sort of saying after this point here, okay, well you've gone sideways now, let's see the punch up. When you sort of see it sell down, it's going down to a new level. It just accelerates down. What else can we show? Caterpillar. The institutions, they can't really accumulate price when price has been accelerated upwards. They can't really buy stock float up here. They have to buy stock float when price is actually going against them. Between here and here is a lot more volume. Sure, it moved down. The retail investor shouldn't really get in there. He should really wait to a situation where, yes, there is selling, but the institutions aren't selling. That's confirmation that yes, we've accumulated, prices have been pulled down, we maybe take a few stop outs. We're going to find out whether any other institutions are selling. And that there to there said, right, I'm JP Morgan, we're selling, but I'm looking over to the other trading desk and nobody else is selling. It's pretty light. No one's dumping hundreds and thousands of shares or anything. So look, that's going back up. That's when they can start loading up and marking price up. I mean, they know the risk is light. Now you get a little pullback here over Christmas, just to bust a few stops. I think that might have been some sort of earnings news. I can't remember exactly. But here, when you start seeing the high volume at the highs, there's a bit of selling going on in there. And obviously, it accelerates down here. So all that accumulation that happened down here gets liquidated up here for the profit. Selling started here. I would think that we're starting to accumulate probably from those days onwards. Look at price moves with RTT, trend power, OBV, and you get to work out where the price action and volume and what the institutions are up to. Thanks for watching.